Hello and welcome to the Business and Banking Dialogue Show, a bi-weekly show, which is Wednesdays and Fridays. We try to get you the best of best topics and speakers on various financial and technology subjects. Today, we have a technology subject, more on the technology, leveraging analytics to combat challenges in banking and financial institutions. I'm KK, your moderator and host for today's show. We are live, as you know, on the EPS channels and social media, Facebook, Twitter, YouTube, uh, and LinkedIn too. So, ladies and gentlemen, welcome to the show. The banking industry is data intensive, as we all know, right? And most of you all are bankers, so that's no great. It's no well known. Banks have been, banks have with them massive graveyards of unused and unappreciated data in CBS, ATM, and credit processing, and the entire branch operations, etc. As banks face increasing pressure to stay profitable, control NPAs, and understanding customer needs and preferences, data analytics becomes a very critical success factor. New models of proactive risk management are being increasingly adopted, as you all know, by major banks and financial institutions, especially in the wake of the Basel requirements, which keep getting modified to meet the modern uh, risk in the market. Though big data mining and advanced analytic techniques, uh, banks are better equipped to manage market uncertainty, minimize fraud, and control uh, exposure risk. Despite all this, you've seen there's lots of banks which have gone bust or have had problems, so the data analytics plays a big part in ensuring that the institution remains stable. To know more about data analytics, its uses and benefit in today's data-driven world, we have with us Uma Venkatraman, CEO and co-founder of Ixsight Technologies Private Limited. Uh, Uma is one of the, you'll see a brief profile about her, but I'll just give it to you. Uma is one of the early women entrepreneurs of India in the technology product space. She's a co-founder of Ixsight Technologies. Some people call it I into sight. So Ixsight, okay, Technologies, a company born during the dot-com boom. Her dream was to create a product that would go global. After graduating from Visit in 1988, she did her MBA from the Jamnalal Bajaj Institute of Management, Mumbai. She runs a company that leads with proprietary IP, constantly innovates to manage increasingly fuzzy and big data while providing high performance and scalability across large number of banks and other organizations. One of the major applications of the product is in compliance and risk during onboarding. Built to last has been the guiding principle in her journey. Uma and her team have helped many organizations build better practices to manage the risk better. Right in front of you is her profile. So let's get going. Uma, welcome to the show, and good to have you today in our show today. Uma, good evening and welcome to the show.
Thank you. Thank you. It's a great honor to be on the show. So I think it's great to meet all of you, and I hope I can add value to whatever we have to say.
Sure, I'm sure we will. Sure. I think we will. So, Uma, no debate in the business and banking dialogue show goes ahead without mentioning the current pandemic that we are going through.
Right.
Because there was one black swan that has really, has impact across the board. People, organizations, everything. You name it.
Right.
So COVID-19 has changed the operating environment for banking and financial institutions. Could you please explain with examples on the impact of the pandemic on the branch operations, typically the ATM operation, liquidity management, revenue and cost management, business models, and how analytics plays a role in mitigating some of the issues that are prevalent in the branch operations.
Yes, I think the audience here and ourselves have been users of banks who as much got impacted. But let's look at it from the banking side. So we can talk about it as in terms of big C's. From the bank side, it is more to do with cash withdrawal. Then you have customer communication. You have contact proximity. You have credit recovery. You have collections management, and you have the big consumption
Uh, Ladies and gentlemen, just wait for a second. She has some network issues, I guess.
side,
Uma, are
it's
you there?
all about yeah, I'm there. I'm
Yeah,
there.
we lost you for a second or so. Yeah, you are. Go ahead. Hello, Uma.
So,
Sorry, ladies and gentlemen. Go ahead. Go ahead.
we're not focusing on who is the maximum beneficiary. You can hear me, right?
Yeah, yeah.
So
In
if there
between,
is a senior citizen like my father who is actually used to going to the bank, he is unable
yeah.
to go there. He has got a debit card. He doesn't have a credit card. Now the bank can
Uma, you're there?
Yeah, I'm sorry, I
Yeah.
just don't understand what's going on. The second is rural customers. Rural customers, there is a problem because there is a branch in a Mofussil town, and the customers are coming from faraway places. Typically, you will find there are a cluster of villages. These people are not as smart as the urban people. Again, they are loyal customers. They depend on cash withdrawals. So special days to visit less who are not digitally savvy. So these are two places.
Uma,
Locating
Uma, can I interrupt you?
Ruski praise.
Uma, can I interrupt you?
Yes, you can.
Yeah. I think we're having a difficulty in. If you could, I don't know what you. If you could just join again, if you don't mind. I mean, we'll just hold on because we are not able to get you at all. Sorry, ladies and gentlemen, for this. You know, this is the problem with online sessions that network is so dependent that sometimes it fails. Most times it's up, but sometimes, depending on where you are, it can fail. So that's what we're having. Unfortunately, it's a excellent. She's an excellent speaker, Uma, and we could have heard a lot about data analytics. One such topic we haven't covered in the business and banking dialogue. So we thought it will be a great subject to talk about. generally we talk about banking reforms and such other things. And we thought, let's look at some technology aspect, some aggressive technologies. And so we looked at data analytics. And that's how we thought today's topic will be of great importance to us. So just hang on. I think she will join us, and
Yes.
we will continue our dialogue. Yeah, hi. You're back. Yeah, great. Yeah, go ahead.
Okay. So I was just talking about how rural areas which don't have access to the bank branch, they are in desperate need of, the branch can do analytics on how proximate they are to the bank. So
Yeah.
they can identify which are the stable customers
Ma?
for collection. Are you able to hear me?
No, we're having a lot of issues,
Okay. So
network
just
issue.
give me 1 minute. Just give me
Yeah,
one
sure,
minute.
sure. Take your
Yeah.
time. Fix that. So, ladies and gentlemen, while Uma goes ahead and tries to fix the network, we would like your comments too. Do send us your comments on the business and banking dialogue. And as you know, we have made it bi-weekly. We have it from 6 to 7 o'clock in the evening. How does it meet your convenience, yours or your friends and peers? Uh, does it meet your convenience, or you feel we need to change the format, the timings, the days? We would love to hear some feedback from you. So do send it to us, and we'll be happy to uh, take those suggestions and see how best we can modify the program going forward. So while Uma fixes the network, let's patiently wait for her. I'm sure this topic is of great importance, so I thought we could just be patient a little bit and wait for her to come. Thank you. Once again, sorry for this interruption. Um, we have not been able to get the network. Uh, so we while Uma fixes the network, uh, let's have a chat. Why don't you tell us what are the new trends and topics around banking and payments that you would like to listen, and maybe if you have speakers that you know of who you feel we should bring on board, maybe you should. It's a good time while Uma comes back to tell us what are the new trends and topics that you would like to look at. We've been
Is that better?
looking. Yeah, yeah, Uma.
Is that better?
Yeah,
So I've changed the network, so I think that should work.
yeah,
Right. So we were on the last thing. I was saying the last point, one very critical point. See, people have
yeah.
lost jobs and salaried accounts are a big issue. At the same time, the government is saying you need to give loans to SMEs and so on. So if the bank's branches could identify which salaried accounts are getting money into the accounts regularly, they would have a fix on which are the stable customers and which are the companies which are not having a problem during the pandemic. So these small companies or medium-sized companies which are operating well, they could do some analysis on type of company, on size of company, and then they could proactively give them loans because they're assured that the money will come back. So while there is a problem with the operations which are hampered, I think the focus needs to be there on what is working for them. Right now, it's all negative, and they are just doing one size fits all. They're just trying to go and have golden hours, any hours. So the people who need it the most, they are not getting addressed. I think with a little bit of data analysis, branch operations, which are now getting affected during the pandemic, can be improved. The last point I will say is there is, a leading credit card company, and I remember talking to them, and they asked us some solutions. They have a huge issue in the operations. Their entire operation depends upon them reaching out to and verifying the customer's address before issuing the credit card. So this was a real central problem for them. They never thought of any other way. Now, how do you verify the address? First, there is no national address database, and secondly, the field force cannot go into any of the locations. So one of the thoughts there is they have previous historical data. They have previous experiences where their member has visited that same building or a nearby building. They can easily look up patterns whether the address exists. Number one, they can also get references. I know it's not the best solution, but at least they will have 60 to 70% because they are very focused on the kind of customers they sell to. So they were quite excited about this, and there is some way they could use data to overcome this operational issue. I mean, these are some of the challenges which we can see branches are facing. On the revenue side, they can't open new accounts. So I see a new account opening itself a challenge. So there's a large part of people trying to move their money from mutual funds to deposits. Many people don't even have money. So let's focus again on those who have the ability to open new accounts. There are multiple challenges for this. Again, locational analytics. For example, when I tried to open a deposit account, I realized the difficulty a person has to go through. The site will say, unless you give access to your location, you will not be able to proceed. So I will click allow. Once I click allow, it asks me my name and number and asks your mobile number, and then they will call you. Now, I could not get called. I couldn't receive the call at where I was staying. The mobile signals were bad, and I could never conclude that deposit. The branch does not tell me who's the nearest center to whom I can approach. So finally, I had to approach some other, person. You call it a broker or an agent, and opened new accounts. So the bank or the branch, they do a bank level. They're not using intelligence again to enable overcoming this hurdle that people have to go to a branch only and open accounts. So how do you get people to open new accounts? How do you reach people who need it? How do you reach the people who need loans? These are some of the challenges banks are having. Uh, Liquidity, revenue, they're all linked to the same thing. So if they open more accounts, they're able to identify good loans, they're able to assess risk better, it will work.
Okay. So, do you have any data to, yeah, maybe it's a little too early, but any data dicing that you have done which says that are people more comfortable not going to the bank, or because of this pandemic they are kind of used to this,
Uh,
and do you have any such insight?
Yeah, so people not going to the bank. Now again, see, okay, so there is a bank that did a segmentation exercise. Now, it's very obvious, of course, you say millennials and all these things.
Yeah.
I think people are India being very mobile centric, people are very comfortable using the mobile. And so they use mobile for everything today, right? From booking movie tickets to airline tickets to ordering food, to even what you call banking, maybe to some extent.
Yeah. Yeah.
But right now, this pandemic has created a completely new paradigm where you're forced for everything to operate online. You cannot go to the bank for anything. There is a large population which does not use online banking, and that is a fact, and they are not comfortable. So that's the profile which I think bank has to determine whether they form a large part of their segment, whether they think they should deal with them at all. I addressed that earlier. So the urban population, bulk of the people, the young people, they operate through ATMs, they withdraw cash, they operate online, UPI payments, no issue. There is a segment which I'm saying senior and mid level, they operate partially online, but they need to go to the bank for their tax statements, they need to get their bank statements done. They need to visit to, and those who frequently transact, so high volumes, so they are not comfortable as yet. And forget online banking, the online banking, there is a lot of fear and anxiety still. So there is a cross section which is not very comfortable at all. And I think they form a significant part of the banking customer base. So they have to have different strokes for different folks. So that's how it is.
Okay, cool. That's good. Thank you very much. You have this constant this thing of saying advanced analytics. So analytics and advanced analytics. So is there a difference? And second question is, how can advanced analytics or help the banks and financial institutions to kind of navigate the changed business landscape? How do they help?
Yeah. So now you have used the term advanced analytics.
Yeah.
So when somebody says advanced, if I ask this audience, they will immediately come up with, predictive modeling, R modeling, and, Internet of Things and so on. So this is the term that is used with advanced analytics, and I just do not want to use that term at all. Because it's associated with infrastructure, it is associated with kind of technology tools, it is associated with models. So let's take that myth out of the picture and let's just address what do we want to achieve through analytics. What is advanced analytics? That is the ultimate utopian dream whereby which you are able to maximize your profitability from your customers. You're able to know where your most profitable customers are, and you're able to redefine your balance sheet. This would be the ultimate dream and end goal of advanced analytics. So in this whole, what do you call, in this whole journey, where are the banks? Let's, even if you look at the bottommost level, I think bulk of the banks, at least this is how my interactions with banks go, there are these isolated pockets, and where there are prototypes being developed, where there is a team set up, where there is an outside consultant which is in place. So that's one part of the story. There is analytics being done for risk management, for churn, for repayment capability. A lot of the focus is on what do you call the loan side and credit side. Then you have the other side, which is the revenue gain. So a lot can be done on that side. So majority of the public sector banks, the large banks are sitting on a large base of customer data. They're very comfortable. Most of them do what is called as campaign analytics. So you send out a campaign, you see whether it's successful or not. So how it can help? It can truly help if banks look at the entire data chain. Today we are talking of, you throw these words, you have mobile data, you have clickstream data, you have geo data, you have structured data, you have social data, and so on and so forth. So all of this is nice to say, but where are we in this whole chain? So if they look at even two parts today, if they look just at the mobile data, which does not even require anything, it does not require profile, I think a lot can be achieved for today's scenario. It has been thrust upon them. So they can simply know the location, they can simply know, use it for intentions, preferences, feedback, or even to make offers. But that's just one part of the story. If they want to make a truly profitable customer engagement model, they need to understand the customer preferences, and that's not understood by mere data or transactions. They need to capture this data, they need to have a unified data view, which everybody will say. But once they do that, and then they make customized offers, then they make, I'll give you an example. So I have a colleague, and his mother is, pretty old. She's 60 plus. So she got an offer of a two-wheeler loan for a scooty, and not just one, just because the gender was female.
Yeah.
How can you give such an offer? Or
Yeah.
there is another example. You have say 10, 15 lakhs. Say you have sitting in the bank account, and you get repeatedly called for a personal loan. Why in heaven's name do you need personal loan if you have that amount in the bank? You really don't need it, right? So
Yeah.
they just, take one part of the whole database and they call it analytics, and then you get so many calls. So I'm saying this has to change. So if you want to create a truly customer engagement model, you have to be able to create that entire experience. It's not just taking one number and calling. But it's difficult for most banks because they don't have enough data, or it's in silos, or it's just transactional oriented. So it needs to be use the low hanging fruit, which is mobile data, and build up your real data. You need to build it up. It takes a lot of effort, and it takes senior management support, but it definitely has benefits.
But you said about this messages going to the wrong people, right? Or it's not personalized. That's what I would say, like to say. So it also is the fact that typically the PSU banks, they have a lot of data, but the data is not obsolete. Some of them, like when they started the core banking, I know we used to, we just put a date as 999999 and just get away with it, and say, okay, I will change it later on. But it never happens. And so that's where perhaps the problem lies, in that data analysis is great, but if the data itself is bad, you really can't do anything about it, isn't it?
Yes, absolutely right. I mean, I think what you've said is hitting the nail on the head, and it's not just the public sector bank. I think today one is exposed to a lot of data, insurance data, private sector bank, and there's a problem with date of birth. I don't understand. Half of India doesn't know when it's born. So the default
Yeah.
date of birth is 1/1, and they use it because that's the date at which you get school admissions or whatever. Insurance has a very big problem because they depend on date of birth to determine the age of the customer, to determine the premium. And bulk of the dates will be 1/1 some year, or 1st June. So this is a problem. As far as public sector banks is concerned, yes, the migration has ensured that you just fill default dates. So your age is completely out of the picture. So the only data which you have today, which I think is pretty good and decent, is mobile numbers are really picking up. And the
Yeah.
other data which has got immense prominence because of this focus on KYC is PAN and Aadhaar. But if you want to do true data analytics, you need to go beyond this. And the data that we do have in abundance, even if it is partial, I think you have addresses. Now, addresses can speak. They can speak volumes about a person. For
Yeah.
example, so if I were to tell you that today address is used for, you can say, you have prosperity indexes, you have ward-wise prosperity indexes. So
Uh-huh.
in the good old days, if people here are knowing Marg used to be a research agency, so they'll figure out socio-economic SEC classification, SEC ABC. So it's the socio-economic classification of a customer. Today, what we are talking about is, can we break up localities? We are not talking of pin codes. We are talking of localities within a pin code. Can I break this up as income and income and propensity to spend? So you have data points for each of the localities where you know the education qualification, and you also know the propensity to spend to surrogate data. Now you have the banks with a lot of data. They don't know where to set branches. They don't know which branches to close down. They don't know where to allocate their sales force. They don't know where to sell wealth management products, where to sell insurance. Now, insurance is a product which maybe somebody who's up, slightly more educated will buy. They want to be assured. Whereas a business loan might sell in the business loan areas, or personal loans may sell where people spend a little more, and so on. So this data is available right there sitting in the address, but that address itself is terrible. It's wrong pin codes, just like a default date of birth. You have a default pin code, and many banks are trying to utilize that pin code to geocode it and then plot it on maps. So they've got all the analytics going for them, but they don't have the data points. So they have to work from bottom up. There has to be a will to do that. Don't try to recapture addresses and call every customer. That's not going to be possible at all. So this is a mechanism through which they can do. The focus is, can I enrich my data with mobile alerts? They're always operationally focused. Can I
Yeah.
enable SMS alerts, so on. So this is what we can do.
Okay, yeah, sure. So, ladies and gentlemen, I continue to have discussion with Uma. It's getting interesting with what's the analytics that can do. And if you have any questions, you know what to do. But just for any, in case there are any new participants, you can put in your questions in the Q&A box, and I will try to get it across to Uma as soon as possible. But if you wish to talk to her directly and ask a question, you could do that too. So you could raise your hand, and the digital team will identify you and give you the opportunity to ask the question directly to Uma. To answer or not a question is the she has the right to answer or not. It's if there is some very conflict of interest or tricky question that is asked to her, so that she will take it. I hope, Uma, you don't mind that.
No, no, not at all.
Okay,
Welcome.
that's great. Yeah, that's great. So let's look at the. So what is the maturity of analytics in banking and financial issues? Before that, I want to ask you one more question. You touched upon the insurance, medical insurance, typically, and during this period, if there is one industry which has really been doing fantastic or very very well, is the insurance in the healthcare industry, right? And there's a lot many more people taking insurance and other things, but the same question happens: do you have the right data, and are we capturing the right data, isn't it? So should the insurance company, instead of just using default dates, be should they be wary that they should get the right date and the KYC before going ahead? Would you advise that?
Yeah, so here, of course, unlike life insurance, so if you compare life insurance, we compare health insurance. So life insurance, they're very particular about the date.
Yes.
I don't think in health insurance being a short term, 1 year, 2 year, they ever look at the dates with any great amount of seriousness. I mean, I don't recollect them insisting on, detailed checks on your date of birth, your age, and determining a health plan. Though I think the premium changes, right? If you're after 45, you need to have certain health checks and so on. So in health data, I think one of the problems, they do ask you a variety of questions on the website. Now, a lot of the health insurance is done online. You just click there and you renew your policy. So there they use foreign, some of them use overseas kind of tools to determine the kind of, what is the premium the customer should pay. The other is they have underwriters. If at all it is to be referred to an underwriter, then they need to get the underwriter to assess based on their own intelligence as to what is wrong with the person. So the person will say, this is my lipid profile or whatever it is. If at all it goes to that, they want to get into that. So there is a lot of technology. I think one, yes, dates is not there, but surrogate medical information. So that needs to get utilized and channeled. The way the underwriter thinks has to be made into a model so that they can take a quick decision, because there are a lot of applicants for health insurance. They make a lot of business. Their entire losses are due to their fraudulent claims. So a lot of focus is going there on how they can reduce fraudulent claims, right from the diagnostic center, which is giving them a wrong diagnosis because probably they are hand in glove, right from the TPA, right from the doctor who signs the certificate, right from the hospital who's making money. Those data points also during onboarding are as critical as the date of birth, and later on also during the
Yeah.
claims management. I think that's even more important than the onboarding time. So there's growing interest there, in fact, because we can actually do a lot of pattern analysis to find out groups which are in connivance and see how these frauds are happening. So that's how health is going up. They have less data points, but during claims they get a lot of data.
Yeah. Okay, great. Thank you. So let's look at the, when we talk about analytics, let's look at the maturity of analytics in banking and financial institutions, because analytics have been there for quite some time now. It's not a
Right.
new thing. But what is the how mature are they in the key dimensions of say a revenue growth, operational efficiency, customer centricity, risk reduction? If you could throw some light on that, it'll be nice. And if you have some examples, great.
Great. So, if without quoting, so if you go by theory, so if theory
Yeah.
is the way to go, we'll compare theory to the way you have asked the questions. So, theoretical model, there are many of them. I think very famous one is on Thomas Davenport's book, I think, Competing for Analytics. And in that book, he has given various levels of maturity. So he calls the first stage that there is an analytically impaired situation. That is stage one. So analytically impaired sounds like the organization is blind to analytics. So even if they want, they cannot have any data to answer basic questions. To prepare that MIS report will take them some 2 weeks. To answer a simple question like how many accounts you have opened would be very difficult for them. So these people are in analytically impaired situation, and there must, I don't think any of the banks should be in that situation with a lot of focus on reporting to RBI, reporting for compliance. So that's the first level where you need to start looking at data, at least be able to collect it. And the next stage I think he talks about is localized data. So where the organization says we are not analytically impaired, but let's at least start collecting some data. So each branch will be able to provide its monthly assets and monthly reports. They're not going deeper than that. So the senior management is asking, please give us these reports on a monthly basis. They're able to provide the reports. So now they have gone one step above. Data is still in silos, so it is called localized data. This is, I think, so let's say the third stage, which is somewhere between this localized stage and between the third stage, which is, getting to be an analytical model, is where some of the, public sector banks are, where you get a centralized NPA reporting, where you get a centralized overall, SMEs which are being targeted, etc. So, but when you talk of analytics, this is not what we are talking of. We are talking of having a unified architecture. We are talking to know whether Mr. Ram Singh has got so many accounts. He's been responded to so many campaigns. He likes to operate frequently on internet. He likes to, pay his electricity bills to the bank and so on. So to do that, then there needs to be a senior management support, and it's not just prototypes. We are talking of them building a unified architecture, investing in a corporate sponsorship. Here, I think there aren't. I do not know even the best of banks. I think somewhere fall short of this. It's always a IT versus analytics. Analytics itself is a holy cow. It's not
Yeah.
with the purview of most of the traditional users. The salesperson on the road should be able to use analytics. He should be looking at his iPad while talking to a person who wants to open an account and understand that this person is actually somebody, has an account, or, likes to talk in a certain language or whatever it is. So it should not be about, whether the, modeling has been done, or, what is the chi-square, or what is the Gaussian model and so on. So they should not be at that level. So even before that level, I think it has to be across departments. Today, IT department is separate, analytics department is separate, then branch, and somebody is pursuing some project in some corner of the bank. They will suddenly discover that they want to determine which of the customers respond well to calling, or which of the customers are churned. So there'll be a quick action.
Yeah.
So it's not adopted. Then you have, of course, fancy things like chatbot analytics. So you come digitally and you ask questions, and people call it as analyzing the answers, getting psychometric analysis, etc. So fancy words. So I'm saying the first and foremost step is to have a unified architecture, customer-centric view, and then we talk of a household-centric view. The most critical thing in banking is to get an household view, because we talk of advocacy for the family. You start with you start your salary account, you get your ATM card, credit card, then it's standard. You then take a personal loan, you take a housing loan, you take a education loan for your kids, retirement fund, and so on. But there is absolutely nobody who looks at it like that. So the unified architecture is critical. I think that's where we need to move.
Okay. Yeah. Excellent. Thanks, Uma, um, for your observations there. So, ladies and gentlemen, I continue to have my discussions. I look forward to your questions. So, do send it as soon as possible. Uh, Uma, what from your experience, since you established this your company, from experience, give us some examples how banks are using data to create new business opportunities and drive revenue growth.
Yes, yes, yes. So I'll give you some, not so traditional things and the traditional things which come to my mind. The first, of course, obvious things are customer centricity, which is where, banks are moving towards, some of the banks are moving towards creating a common view of the family and family preferences. There's a lot of other areas, locational analytics. Now it's a much tom-tom word. So I'll give you some of the powerful ways in which you can use location in the banking industry. So we talk one of branch performance itself. So a branch, is it attracting customers from all it's got a proximity radius of 3 kilometers. So where are its customers coming from? Are they selling all to a single set of customers? Are their spread increasing or not? So what is the kind of, are they having people around the ATM? So how are they capturing in captive centers? Then there is a company which uses proximity analysis again. So they have calls coming in at the call center, and they got a lot of calls. So they need to allocate their sales force to the nearest call, and they need to respond very quickly and get the person to go there and fill the forms. This was before the pandemic, obviously.
Yeah.
So they are using proximity. So as soon as the address comes in, they can tag it with the geocoding. Now, let me tell you that this is not as simple as it sounds, because in India, you cannot even tag 15% of them to proper geocodes. So if you are trying to use Google and use an analytics to just simply tag it and it will happen, it won't. It requires some kind of effort, and there is a kind of intelligent technology. But to make it all lovely and nice, imagine this lady at the call center and you call and say, I want to open an insurance account in the next 1 hour. Can you send somebody? And so that logic will allow that call center lady to allocate the person who's nearest. Then again, you have locational analytics, and I'm focusing on location because this is one of the innovative areas where a lot of people are talking about the where of the customer. So in fraud, so in say in a place like housing finance, now how do companies estimate potential fraudulent behavior? So if a person is buying a housing loan, let us say far away from where they are located, they are not working there, they are not staying there, they work in Bangalore, they have their hometown in Mumbai, and they buy a property in Gurgaon. They probably will think that this person is not going to repay the loan. They are just taking it for investment purpose. It's just going to be for a short term. If they run out of money, they won't pay. So they use it like this. They're also using things to profile customers. Profiling is a very big area. Now, let me say data points and analytics. You cannot not profile your data if you want insights. Right from enabling the call center to identify emotional connect with customers, talk in their language. So you can extract language from data. You can create profiles of families, so we identify relationships. So, and then you can classify types of families as nuclear families, joint families, family with two relationships, family with three relationships. And so this kind of segmentation companies are using in order to target their customers. So this is how they use, and traditionally they use it for repayment and credit scoring. I think that's been going on for many years, and that's intensified as well. In fact, the risk angle and the AML angle we didn't talk much about. This is a core area. Most fintech companies, most financial institutions, they're paranoid about risk. So a lot of effort is going to use data to identify potential risk behavior. And most of the people who apply for loans do not have any prior credit history. So they are using analytics in new ways than before to determine the risk and repayment capability of the customer. Right?
Yeah. Okay, that's good examples you've given. Thank you so much. That kind of relates that analytics to the example that you given. But we have a question that's coming to you. That's coming to you all the way from London. Mr. Prabhakar Kaza, who is ex-CEO of SBI London, he's asking a question.
Oh.
We are aware that big chains use large data analysis and keep changing their product purchases, display, discounts, positioning of aisles, etc. Any such examples, ma'am, you have in banking?
So we're talking of display in banks. I won't directly relate to display. So let me think what I can tell you.
Sure.
Customer preferences. So you can look at market basket analysis, which is again a traditional thing where if you buy one product, you're likely to buy another product. Especially credit card, those who are credit card customers, you have a lot of data. So banks do use that. Then they also look for preferences. You basically will get into segmentation. Now, if you want to do segmentation, you will need to again get into profiling. You need to have enough data for age, for gender. You will need to know whether you're salaried, not salaried, what kind of employment you are in. But still, banks use a lot of transactional data. They are not into profile information as much. They don't have access to profile information. So they tend to use the kind of transactions. They're trying to use savings account narrations. Of a credit card, you have a lot of this behavior. They use that to segment, position, and target campaign. So like chains. So within a bank, I don't know about whether they locate counters and display material. No, I have not come across that kind of experience in India.
Okay. Yeah, just in case you during our conversation, if you do come across, you remember, do tell us. It will be interesting to hear. So let's move ahead. Thank you, Mr. Kaza, for this question, and we'll see how we can take that. Ma'am, you're an analytic expert. What are the initiatives that you would advise to a bank or a financial institution that wants to improve its operation efficiency?
Yeah, I think in today's scenario, they have no choice. The first thing they will need to do is ensure that their customers don't move to the digitally forward banks, because people just cannot reach out and they will get frustrated. And so the bank is only thinking of its side of the story, how do I increase business? So they're so focused on that problem. So they first need to protect their turf. They need to identify the most profitable customers. They need to identify potentially profitable customers. So they are going to suffer losses in the short term, but they may as well suffer the losses of those customers who are bound to repay later. So can they identify that first? So let's not try and address all problems. I think this is what they need to do first. Whoever they have given loans to, which are the customers they can focus on, even if they are not repaying in the short term, but to retain them. Which of the customers in deposit and savings account, current accounts, they need to make sure that they hold on to them and they modify themselves as quick as possible. So that, and for this, they need to reuse their call center workforce. My second suggestion is do away with the archaic call center concept. It's a huge money drain, according to me. It costs about, I think, at least in the old days, they used to tell me it is around, if a call center person calls, it's 25 rupees a call, or if a person physically visits you, it's 250 rupees a call. I don't see them adding any value. They are not using any numbers to sell. They are intimidating. It's not customer intimacy, it's customer intimidacy, as I would call it. So do away with that. Redirect your efforts in true building customer experience, customer trust. So right now you cannot focus on so much data. So use the data coming from mobile and online. Ensure that it is non-intrusive information, because customer communication is very key in this pandemic. So for alerts, for statements, now the kind of alerts you get on the SMS, it's not often the most useful. So you need to have a lot more alerts, lot more, information flowing, which is non-intrusive, which is not just promotional, which can keep the lines of communication going. Also, try to use that to channelize feedback from the customer, so that you know what they are thinking and you can give proactive offers and so on. So this is the second thing I would say, to use that mobile tool, or you can use the chatbot if there are people who are comfortable with that, because it's non-intrusive. I think there's over communication and wastage of money that can be rechannelized. The third thing, of course, is there is no escape, completely no escape from going on the analytical path, trying to develop it at the grassroots. Don't try and put one infrastructure first, invite RFPs and tenders for massive infrastructure, massive tools. You have consultants, you have data scientists, but you still operate with poor data, bad data, disparate data, and it doesn't even have enough information. So find a way to get that in place. You call it social data, local data, whatever data, you name it. It's not going to work like that. So the third thing, which is a slightly long-term thing, you need to do this. So this is what I would say. And ultimate success for you is the customer is happy. Bain's company have this net promoter score, which I am a fan of, because I think it's very simple. It does away with a lot of this surveying thing. You just ask a couple of simple questions to the customer and you say, will he refer you? He or she refer you. So if they are willing to refer you, you just score. So it's been proven that if your net promoter score is higher, you stand to get more revenue, more cross sell, more upsell. So I think it's not just one way. You have to do it the other way as well. You need to keep the feedback coming. So these are three simple steps. Just address your operational issues right now. Try to redirect costs, wasteful costs of call center, field force, which is draining you, towards more logical places. And third, build a long-term analytical solution and measure it.
Sure. Thanks. That's a good question. So I have a question for you from Hiten Shah. He says, ma'am, live data and stagnant data. Okay. So I mean, what I feel is that historical data and those data that comes regularly and keeps changing. He says, how does an organization data analytics team keep control on the constant flow of changing data?
Yes, a very interesting question actually. I think if you call if you ask what do you call statistical expert, there is a term. You used to have forecasting. Forecasting is a term used for how a company would sit for a whole quarter, hold up in some hill station or something, planning the next year's sales plan, only to discover 1 month down the road the entire sales plan is useless because something has happened. There is a entire crash happened in the stock market. There's something going on. So the word for that, yeah,
you should love those offsites.
yeah, I used to love those offsites. Sit there, the people will prepare 12 months moving average, so on, so forth, and it all looks beautiful. Next year's plans and targets. But today the world is not like that. Okay, so there's a term for that. Instead of forecasting, it's called nowcasting. Okay, nowcasting means using the current data to be able to predict tomorrow. So, let's just take an example. So if there's a government regulation which encourages, and we are talking from both ways, he's talking about live data, which I will talk about. Now, there is a change in the regulation, and immediately you find that, your customers are now inquiring more about, say, home loans, because some stamp duty has been reduced. Maybe your developers have been given more funds. So you should be alert and reactive to that kind of a story. Now, where do you get the data from? So either people are searching on the web or people are calling in at your call center and inquiring. So how does the data feedback into your organization? So that's very interesting. So there are a lot of techniques there to constantly measure what people are thinking, and it's called nowcasting. Even what products they are searching, financial products they are searching, what kind of concerns they have in the financial world, you can. Now, the other way it is used, stagnant data and live data, it's very important to have live data. A model, a predictive model or a risk model cannot hold true for more than a certain period of time today, because especially on the risk domain, customers are looking for new and new ways of trying to fool the system or trying to get the better of the system. So today, and models are also not built at an India level. So today, if you have a risk model for say personal loans, which is an unsecured loan, and as soon as the customer walks in, say the bank can agent will get a score on the screen, which will say that this person is 7 on 8 on 10, but probably that person is 5 on 10, because this model is the same model that has been used for the last year. So the score may be poor. So
Yeah.
what are the factors that could have affected that person's score? Maybe that person who's applied is working in a company and where other customers have defaulted in the last quarter, because that's probably in an export oriented unit, and exports have fallen in the country. So export units are doing bad, people employed there are doing bad, there's been a non repayment of loan, but 1 year ago it was all very good. So unless that gets factored, it's going to cause an issue, because the dynamics are like that. And when you want to get good customers, you have to use live data. That's the reality. There are companies doing it. Models have to change. I know of a company which is even talking of weekly modeling. Even the same case with cluster analysis. A typical cluster analysis means clustering your segments. Basically, you're saying this person is young and working in a white collar person, the other party is a married middle class. That's how you cluster. Okay, now clusters are made once and used for the next 2 years. That's how banks operate. But today there's a concept even in statistics, it's called dynamic clustering. So clusters keep changing. The last month's purchase, if you have enough profile, your clustering dynamics can change. It can change maybe because of your campaign, it can change because of the kind of profile you're attracting. So this is very much critical. And I think those who take advantage of this, and that can happen when you're at the higher maturity level, I would think, because you're able to assimilate data into the organization quickly and it's all unified. It's going to be really advantageous.
Okay. Thank you. Uh, are you okay if we take another couple of more questions? We
Yes.
already passed the 7. Yeah. Thank you. So, ma'am, what according to you are the top 3 target areas in analytics that banks cannot afford to ignore in today's changed scenario?
I think we answered that in a different way some time earlier. So as I addressed, one is a short-term thing. So that I think they have to quickly take changes. Now there are 3 types of banks. There are traditional banks which pride themselves that they have a large branch network. So if they are very, very branch centric and they believe that they're in big trouble, right? So they are not going to be able, physical access itself is becoming a problem. We don't know when this vaccine will come. And even then, I think people are discovering the joys of, immediately paying, you just transfer money, whether it's to your, laundry, or whether it's to the maid servant, or whether it's to the driver. Though I must say that some of the Uber drivers prefer getting cash because they get the payment from the company late. So it's a way of life. Also, I think even going to the ATM itself is a kind of chore, and cash itself, people are worried if it's getting infected and so on. So if you are brand centric, if you are workforce centric, you need to adopt to the new changing paradigm. And even there, and how do you redeploy this workforce? You have to, people talk about training. So do you which kind of people you put in which kind of it's a logistical analytics again, I would say. So there is a people analytics. So what kind of workforce you will put to what kind of task at what kind of time, where are the queues more, where are the queues less, what kind of profile they should address. There's a lot of analytics around that area. There's a cost optimization thing which they need to work on. And more than that, I think immediately whatever they can address to their customer focus has to be the key. As long as the customer, the good customer, the profitable customer, and this is the task. Till I think it's very difficult to identify who will be a profitable customer. The lifetime value of a customer, can they determine, can they focus on the differentiator, and they can work towards that in various ways rather than spreading themselves thin. I mean, this is what I would again reinforce. I think I spoke about the same thing. Keeping customer focus as the mind in mind, they need to realign their entire business strategy in that direction, reorient their budget, get top management buy-in, and create centers of excellence around this. I think there should be clear measurables around this area. So this is
I have
it.
one last question to you. It's come from YouTube, I think. The name is not mentioned. So he says it's all fine if I have a running business, whether it's a bank or a. So, but are there organizations providing analytics where if a new product is to be introduced into the market, is there any way I can determine what's the kind of analytics that can be useful for me before I actually launch the product?
Absolutely, absolutely. I don't know what his new product is. It depends whether it's a touch and feel product, whether it's an online product. So that person is best poised. So if it's anyway, so the first and basic thing when you do launch is, where do you, assuming that he's already determined that it has a market need, a market preference. So where does he focus his spends on, right? He's got limited spends. Is it an online purchase? So if it's an online purchase product, then he has to determine how does he advertise, which channels does he advertise, what is his social media spends, digital media spends. There's a lot of analytics around that area. You can simply look at Google Analytics and see how do people search for your product, how do you make them search for your product, which sites do they search on, etc., etc. So that is before you launch. Now, if it's a physical product and you're actually launching it like a store at which you want to make it available, I think there, I explained that earlier, you need to know where your customers are located. So we have what you call which cities, within which cities, which localities. So which places are people most likely to buy that product, depending on its value, whether it's targeting what segment. So we use surrogate data. We can create, a potential consumption for that product based on the locality analysis, which is the propensity to spend and the behavior of a particular, set of people living in that locality. So then, based on that, it can be utilized for where to locate his product, which stores. If it is a showroom, of course, you need it very much. So it depends entirely. So analytics is very, very key, and it can be used effectively. And you can also minimize the spends through carefully targeted marketing.
Yeah, that's true. Last question, if you don't mind, come from Kulkarni. He says, ma'am, this pandemic, I have not been getting my salary in time. So when I get my credit rating for this year, will I go down, or from my analytics point of view, I'll take care that this is a pandemic. So, you should not.
I think this question, we need the credit bureau chiefs to be present.
Yeah, I know.
Problem, it's not to do with your salary. So even if you didn't spend and you had good salary, your credit rating goes down. Because for your credit rating to be high, I think that you need to spend. So if you've never had a spend, and in fact your last repaid loan was 4 years ago, your credit rating is still poor. I don't think I'm in. So if your salary has gone down, I don't think they look at credit rating like that. They look at your repayment history. Unfortunately, it's like that. And I think that's the problem with numbers. People do not look at what is a person's qualification, or whether they have in the past repaid, whether he's a genuine repayer, whether it's temporary. It's all based on your previous month's history, and that itself needs to go away with. So if it's a credit bureau you're looking at, then yes, they will look at it like that. If you have not repaid the last month, they don't know you have not, your income statement, last 6 months, if it shows it's poor income, it may play some role, but I think repayment history plays a major role. But not to worry, I think you have a lot of companies which don't look at credit history necessarily. They look at a lot of other parameters as well. So there's hope still. So
Yeah. Okay. Yeah, sure. Right, ma'am. Thank you very much. It's been, ladies and gentlemen, a very interesting discussion on analytics, advanced analytics, we may call it. And, the whole analytics subject is so vast. Okay, it's not possible to cover everything in 1 hour, but it gives a lot of meaning. It gives a lot of depth. It gives a lot of decision-making capabilities that I think one should not miss. And that's what Uma has tried to bring forth. So I hope you enjoyed this discussion. If you wish to have more such discussions, which are more on technology based subjects, you do write to us, and we will try to get you a lot more new technologies that are coming into being. With these words, I would like to end the session, and I would request all of you to join me in thanking Uma. Uma, thank you very much for coming over. It's a pleasure talking to you, and I hope to see you at some other show of the Business and Banking Dialogue.
Yes, thank you very much, Mr. Krishna Kumar. It's been a real honor, and it's been a very actually engaging and interesting experience for me also.
Right.
And great to interact with you all. Thank you very much.
Thank you very much. Bye-bye.